Hello, this is Japanese Economic Review Channel. Welcome to our diagnostic briefing on the Bank of Japan's June 2026 money stock figures. Today we will explore a fascinating phenomenon, the profound decoupling of scale and volatility within the monetary system. We observe three distinct dynamics. First, M3 shows macro stability at 1,640 trillion yen with plus 1.5% YoY growth. Second, broadly defined liquidity reveals broad tremors, fluctuating wildly in recent months. Finally, financial institution CP exhibits extreme micro volatility, spiking plus 1,408.6%. Looking at the core aggregates, M2 and M3 remain firmly locked in a rigid, low-growth paradigm. In June 2026, M2 and M3 maintained steady YoY growth of plus 2.2% and plus 1.5% respectively. Despite minor monthly fluctuations, this stability confirms a firmly grounded base money supply. However, broadly defined liquidity tells a very different story. It experienced a severe, transient expansion in Q2, surging plus 14.4% in April and plus 12.6% in May on an annualized basis, before quickly flash cooling to minus 0.1% in June. What exactly drove this sudden, severe pulsation? The epicenter lies entirely outside our traditional money supply. A massive gap of approximately 694 trillion yen separates the stable M3 from the volatile broad liquidity. The recent tremors originate precisely within this outer perimeter of market-based financial products. Let's dismantle this 694 trillion yen gap. By outstanding balance, pecuniary trusts at 488 trillion yen and investment trusts at 124.2 trillion yen dominate this outer perimeter. But to truly diagnose the volatility, we must shift our focus from mere scale to velocity. The structural heavyweights are surprisingly stable. Investment trusts maintained a steady plus 12.1% YoY growth in June, while government securities decelerated to plus 19.4%. These components function as stabilizing counterweights, not volatile accelerants. Our volatility matrix isolates the true anomaly. While major components stabilized, financial institution commercial paper entered a violently anomalous trajectory. By June 2026, this hyper-accelerating microcomponent broke a staggering plus 1,400% YoY growth. Here is the micro-shockwave. Financial institution CP. Although its outstanding balance is a microscopic 0.1 trillion yen, just 0.004% of broad liquidity, its plus 1,408.6% exponential growth signifies an acute, localized structural shift in short-term funding mechanisms. We are witnessing two decoupled realities. Beneath the unshakable 1,640.0 trillion yen surface of M3, institutional short-term plumbing exhibits explosive volatility. Assessing systemic health solely via M3 completely masks these acute, localized market fractures. This diagnostic matrix contrasts these dynamics clearly. M3 represents massive scale with a plus 1.5% flatline trajectory, ensuring real economy stability. Conversely, financial CP represents a microscopic scale with an exponential plus 1,408.6% spike, highlighting a localized funding shift. In conclusion, our June 2026 snapshot shows stable core aggregates, with M3 growing at plus 1.5%. However, broadly defined liquidity grew plus 4.5%, hiding the plus 1,408.6% surge in financial CP. Headline aggregates clearly obscure extreme structural volatility deep within institutional funding channels. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.